सीखना है तो पूछिए और कमाना है तो खरीदिए। जानकारी, सलाह और निवेश सब एक ही सुपर ऐप पर। पैसे का सवाल है तो जवाब है मनी9। आजादी पैसे की। अभी डाउनलोड करें।
Hello and welcome. You are watching News 9. I am Suyash Maheshwari and with me in the studio is my friend and colleague Kartik Malhotra. According to the exit polls released on Saturday, the Bharatiya Janata Party-led NDA is poised to secure a decisive victory, potentially winning around 350 of the 543 seats in Lok Sabha. Some exit polls even suggest that NDA could make history by surpassing the 400 seat mark this time around. The predictions also indicate surprising gains for the NDA in 5 states including West Bengal, Kerala, Tamil Nadu, Telangana and Odisha. Furthermore, the markets will also react to the better than expected GDP numbers for the March quarter as well as FY24 that were released after the market hours on Friday. With such momental outcome potentially on the horizon, what does this mean for the stock market? How should you position your trades this week? And which sectors will likely to be in the spotlight? To answer these questions and more, we have assembled an elite panel of market experts. Mr. Nilesh Shah, Managing Director at Kotak Mahindra Asset Management Company, Feroz Aziz, Deputy CEO at Anand Rathi, and independent market expert Mr. Ambrish Balega. Kartik, I'll come to you first before we get to the panel. I think as far as the exit polls are concerned, most of us were factoring in a sweeping victory for the incumbent government. But what came as a surprise to me at least was that, these exit polls are also giving edge to NDA in West Bengal over TMC, and they are also expecting a better tally for the BJP this time around in southern states. Even in Odisha, for example, they are expecting BJP to edge the opponents.
Suyash, hi, good morning, and it's good to be here, and I think it's, like you mentioned, it's a fairly monumental occasion, and every 5 years that you see elections, that pretty much sets the tone and sets the mood for the next 5 years to come. Now, while the markets and many of us had factored in the potential of BJP-led NDA government coming back to power, there were supposed to be certain stress areas which, if the exit polls are to be believed, and that's a big question, should you believe exit polls or not? Because exit polls have surprised in the past, and 20 years back, I think 2004 was the first time in recent history where exit polls were completely wrong, and we really not see the incumbent BJP government under Atal Bihari Vajpayee coming to power, but we had a change of guard with the Congress-led UPA government coming to power for the first time. But like you mentioned, there are certain, swing states which in the exit polls are now seeming to work in favor of the BJP-led NDA alliance. So I think if exit polls are to be believed, फिर एक बार Modi Sarkar cannot be ruled out, and some exit polls are also going further ahead to suggest that the NDA combined alliance could actually be 400 par.
Could be 400 par, at least that's what the polls are suggesting, the exit polls. Now, Mr. Shah, I'll come to you first. Exit polls, a clear mandate is there that 350 is at least what perhaps NDA government will be able to rake in 2024 general elections. How big an opening can we expect for the market tomorrow? Because, I remember back in 2019, after the exit polls, the immediate Monday, after the exit polls came out, Nifty surged about 3.7%. What are your expectations this time around, sir?
So, Suresh, first, thank you for having me over here. I believe market will be opening with positive bias, partly because of the GDP number, which came ahead of expectation, and partly also because of exit poll. But as Kartik mentioned, we have to wait for actual results. Second, this is not the time to be a trader and play for exit polls and election. This is time to be an investor, where you should be investing in the journey of becoming a Viksit Bharat. As an investor, you are likely to make far more return than trying to time the market as a trader.
All right, and Mr. Baliga, I'll come to you. As Karthik over here was alluding, how much weightage do you actually give these exit polls, considering that about 60 to 65 crore people vote in this country, and the exit polls only samples around 8 to 10 lakh people, which is less than 0.015%, sir. How reliable do you think these predictions are, Mr. Baliga?
No, first of all, if the predictions would have been completely wrong, I don't think these agencies would have existed. So I think we need to give some weightage for this. Yes, I think the numbers could vary from the ones which have been given out. And again, this time I don't think it was really a question whether NDA would come back, possibly end up at 310, 320, and BJP closer to about 272 plus. But then with the sort of exit polls which have come, which are indicating 350 plus, I think the markets should open gap up on Monday. And in case these are the same numbers which get which in fact get translated into the real results, and they are also 350 plus or maybe 360, 370. I think this rally can continue because this really gives the roadmap for the next 5 years. In the sense, it's at least the roadmap for the next 5 years is decently clear.
Mr. Baliga says the rally could continue and we could see a big gap up opening come Monday. But Feroz, I'll come to you. A lot of analysts and investors that Karthik and I speak to pretty much on a daily basis, including Mr. Baliga over here, had indicated, it will be wise to keep some cash positions in your portfolio in the lead up to the polls. So let's say if you have about 1 lakh rupees to invest in cash right now, how should one deploy their money and what sector should one consider buying into, sir? I know it's not one size fits all, but anything that's a general representation of portfolio allocation.
See, I think of course if somebody has kept some money as cash, liquid cash to get into an election, I personally think that's not going to be more than 10% of one's wealth. The larger question is what to do with the 90. If your asset allocation in the 90 is not great, then this 1 lakh will not do the trick. India has only 3.2% of the total household savings in mutual fund, and in direct equity, individual holding is 3.2% out of the 800 lakh crores. So most people miss the larger picture. So firstly, if you're not going to be invested 60, 70, 80% in equity for your long-term monies over the next 5 years, I think you're being significantly pessimistic for a situation for a country like this. One. So point one, at least 70-80% of your money should be in equity. If it's already 80% in equity, then the 1 lakh again can go into equity as long as it's 5 year plus money. That's point one. Point two, what are the sectors which will do well? Of course, those are usual suspects. Defense, we're going to be spending 6.5-7 lakh crores on defense. We're going to spend 2.8 lakh crores on railways and railways is 2.5 lakh crores. Road and highways, we are spending about 2.7-2.8 lakh crores. The kind of infrastructure spending with the tax collection going up, we grew our direct tax collection by 19.7% on a back of 21% again. So if these are the kind of tax collections which are going to happening, the infrastructure spending, especially for these sectors which I read out, railways, roads and defense, is going to go up. Now, is that already priced in? Is the second question. But if you came to mutual fund platform, I don't think the next 5 years needs you to do direct equity at all. Because if things are good, you can use a mutual fund platform. If the broader market is not going to do good, then you have to get into direct equity, buy those 5 stocks and do a lot of research. I think this 5-year era is a mutual fund era. Because direct equity does not, we have so many direct equity clients, they don't beat 20%. We compare them with Nifty on an alpha basis, which brokers don't. Most 92% of them underperform their the mutual fund peers. So point one, have 80% in equity. That's the first piece of recommendation. If you have money sitting outside to deploy it on Monday. Of course, the actual elections could throw up a different result, but I think as long as the government continues with 280, 300, whatever that number be, there could be a short-term blip if it's not as expected as 350, 370 as per the exit polls. But I am reasonably clear that the government will be formed, irrespective of whatever the total comes to. So put your money on Monday. That's what I would do. And 3 sectors which I read out. Take 3-4 mutual funds. They'll give you those 16, 17, 18% also for a 5-year holding, because I think Nifty can double in the next 5 years, which is 13,
That's a
14%.
big headline. Nifty will double in the next 5 years is the word coming in from Firoz Aziz.
I mean, that's a CAGR
50,000 levels is what
50,
you're...
which simply put were better than expectations, both for the March quarter as
That's
well
right.
as FY24. Now, this puts us in a Goldilocks sort of a situation, you know, compared to our peers, where inflation is coming off nicely, as well as the GDP and the economy on the whole, as indicated by your GDP numbers again, your PMI numbers, both services and manufacturing numbers. Everything is going well for Indian economy, right? Inflation coming off nicely.
So I think, yeah, Goldilocks is a nice way to put it, because, you know, it's just right. All the parameters, the entire report card tells us that all the parameters are working in favor of India. Now, are they working in favor of India only because of continuity in the center? And is that likely to get impacted in case of the low probability, at least as far as the exit polls are concerned, the low probability of a change of guard or not is something that we'll have to see. But I think let's just try and run through some of these numbers. Look at India's GDP growth rate. So except for 2021, and this, remember, was the COVID year where we had actually seen a dip in GDP coming down to about 5.8%. But largely speaking, Suyash, you look at the 2014 onwards, ever since the BJP government came to power for the first time. In fact, 2014 was still the UPA government's sort of, you know, hangover reflecting in numbers. But we've seen a fairly sizable, decent growth until we saw one dip in 2020. Now, this dip in 2020 cannot be attributed to COVID because we hadn't really seen the impact of COVID hit the economy until the month of March. So maybe a few decimal points could have been impacted in the growth numbers for 2020.
And perhaps that negative figure in 2021 comes
2021
because of that.
was absolutely because of COVID. So then when we saw almost a double-digit growth at 9.7%, that was on the low base effect. But on that high growth of 9.7, we have still been able to grow at 7% the next year and a massive 8.2% this year. So this 8.2% which came on Friday was fairly unexpected by anybody. Even the RBI had not factored that in. But in addition to this, let's also look at the inflation, because, you know, growth, of course, is one part of the Goldilocks, things being good, but then there is also inflation. If you look at inflation, and we've been stuck now for many rate cycles at the 6.5% interest rate, but we have seen inflation also taper down slightly. So from the high of July at about 7.4%, and that is when, you know, the impact of the rate hike actually kicked in. So, you know, we've seen 7.4% gradually step down all the way to about 8.7%. A marginal increase in November and December, largely again on account of food inflation, etc., which we saw the impact playing out in the month of November and December. But since then, I think again, Jan onwards, this entire calendar year, we've been stepping down little. So overall, you know, if inflation comes in the vicinity of about 4.6% for the whole year, and that data is expected soon, then we should be, as you defined, in that Goldilocks scenario where inflation is working well, growth numbers are coming well. But there is a bigger challenge here, and I believe that bigger challenge is on account of services. So services economy is something which I believe will really need to kickstart, reignite itself and deliver for India's growth to continue.
All right, and we will also have the policy decision from RBI, you know, later this week. So more factors for us to track, you know, what RBI does next, because of course they find themselves in a comfortable situation, unlike the US, where inflation continues to remain a problem, and if they, you know, and economy continues to do you know, well at the same time. So if they do go for a rate cut, economy will continue to get hotter, and that is where good news becomes bad news.
Absolutely.
But we find ourselves in a much better position, and you know, Mr. Shah, let me take this to you. The economy, I mean, continues to perform well, and historically, markets tend to stabilize or even perform positively a month or two after the election. So beyond that immediate market reaction that we will see play out this week, what are the key factors, sir, that you will be watching closely after June 4th?
So one, our market trades at a premium valuation to peer group, and that is pricing in 3G of India. One, our earnings growth will be better than peer group. Second, our governance standards will be better than peer group. And third, we will do green transformation of our economy. Sustenance of growth, governance standards which respects minority shareholders and capital, and creating a growth model which is green rather than destroying environment will be three critical things on which investors will continue to evaluate India. And that is where now there is hope that 100-day program will unleash some big bang reforms. So immediately after election results, if they are in line with exit polls, focus will shift on 100-day program, including the budget, as to how do we improve our 3G, earnings growth, governance, and green transformation of Indian economy.
Right, that's a word coming in from Mr. Shah. But Mr. Balega, I mean, we are expecting, and you have also pointed out that we could potentially see a gap up opening come Monday. But again, drawing parallels with 2019, counting day, we saw a very volatile session for Nifty. Nifty rose as much as 1%, ultimately settled in the red. Do you see profit booking taking place this time around as well after, as we get closer to 4, because pretty much there are 2 days left after the results, after Monday, right?
Yeah, I mean, in fact, by fourth morning, say by about 10:30, 11, I think the trend will be very clear and you know exactly how many seats. So I think this trend can continue for a while longer. I mean, before that correction, because corrections anyway is a part of the market. You'll see a lot of corrections in between. But if you're talking of the longer term story, I think that is intact. So as long-term investors, one should not really worry. And I mean, whenever we have those sharp corrections, I mean, surely your corrections can be sharp based on the news flows. Utilize those corrections to buy in. I think that's the way one should be investing going ahead. Because if you look at all the macro numbers, I mean, you just talked about GDP. You look at the GST flows. I mean, that's been extremely good. Look at the RBI dividend, which was announced recently. I mean, it took everyone by surprise. So deficit would clearly be under control. So I think, I think the only thing which can derail India are the unknown factors. And when you invest, you really can't account for these unknown factors. I mean, it can happen anytime. But whatever is known, I don't think anything can go wrong with the India story.
All right, and right, Karthik, and we were talking about so many positive factors that investors will, watch out for come Monday, and we'll see that in price action. GST numbers also came out.
That's right.
And 1.73 lakh crore figure for the month of May. But I don't think
it's a rise when you look at it year on year. But
10%
but if you compare it to the number that came out for the month of March, we see a decline sequentially. But March, in any case, is a good month for GST collection, as we know.
But apart from all these factors, it seems like FIIs are just not convinced. I mean, they have pulled out close to 1,25,000 crore worth of money from Indian stock markets in the first 5 months of 2024. What do you think explains that, Karthik?
I think Feroz is going to be the best suited here to answer that. But before I let you come back in, Feroz, for our viewers, I just want to run through some more data, and I think that data is also fairly contextual here. If you look at counting day and how exit polls and counting day sort of differ with each other, here's the data on the screen. Nifty 50 on counting day. Let's go back again, 20 years, 2004, when the exit poll had got all the predictions absolutely wrong and were expecting the BJP-led government to come back to the center under Atal Bihari Vajpayee. That did not happen. And see how badly markets crashed. Almost 12.2% decline on counting day. Compare that to 2009, and 2009 till then we had seen the scams of the UPA government come back. But this is 1 year after the financial crisis of 2008, the Lehman Brothers subprime crisis in the US, and with the UPA government coming back to power, markets had reacted positively on counting day, touching the ceiling almost, going as high as 17.7%. Cut to 2014, when markets were expecting the Modi wave, Abki Baar Modi Sarkar, markets were expecting that, and that was already factored in, and that led to markets actually on counting day scale up only 1.1%. But cut to 2019, like you mentioned, after the initial buying frenzy, players actually book profits. Now, coming to your question, the FII data, I think that FII data is something that we would love to have views on also. FIIs have been on a selling spree at least all of the last 1 month. If you look at the amount of FII inflows into India in all of the last financial year from 1st April 23 to 31st March this year, we've seen almost 2 lakh crore rupees inflows coming into FIIs. If you just look at this financial year, 1st April to Thursday, which is last Thursday, 29th of May, almost 1/10 of that, 10% of whatever was the inflow for the whole year has already been sold. Now, it's a different story that domestic institutional investors and retail participants are continuing to play the India stock story. But Feroz, how do you read FIIs? Do you think FIIs had become jittery of looking at keeping their money in the Indian markets and had hence tried to book profits. And what happens from now? Are they really going to, come back come Monday and definitely counting day onwards?
If you look at headline numbers, now headline numbers generally hide more than they show. If you look at these 30,000 crores of exit, close to 29,000 crores of sale from FIIs, I don't think it is too much, point one. Now, why is it not too much? Because FIIs generally are very cautious. If you look at their index short positions, I have never seen that happen. 55 long, 45 short, one day before, next day you have 87 short. That's basically a hedging position. If you look at their overall long position and then you see these short positions, then you will have them in context. Actually, it's a good news. In the last 3 general elections, on the counting day, DIs have been net sellers. Only FIIs have been buyers. And they have always been a seller before the counting day. Because they're institutions, they like to not go with opinions. They like to have their hedges. That's point 2. If you want to see the exact confidence of FII or superficial investment in India, if that's the debate, the best way to calibrate that or the barometer is what is their exposure in Indian small caps. You would be surprised that in their small cap index, MSCI India small cap index, there are about 465, 67 stocks. Indians in India sitting have only 250 stocks. And if you look at the kind of ownership which they have increased over the last 1.5 years in the small cap space, very well knowing they can't sell it on a day, it's clearly an indicator that they've come into India not with hot money. People bring hot money, they buy the top 10 counters of Nifty because they can sell it within an hour. But if they're going to buy stocks with 10,000 crore market cap with 4,000 crore free float, and if they own 1,500 crores of that free float out of the 4,000, they know very well that this is long-term money. So FII's behavior, if you look at the headline number, may sound negative for this financial year, but I think the deeper numbers show great conviction, especially if you see the change in the small cap ownership and the extent of number of small caps which are there in the MSCI small cap index. I don't think anybody in India tracks that. Ironically, a foreigner has 215 stocks more in their India small cap index than the Indian mutual fund industry does too.
Okay, Firoz, I just want to come back to you. Something very interesting. You mentioned that domestic institutional investors have been net buyers on counting day. How do you explain that? Did you say net buyers or net sellers?
Net sellers.
Net sellers. Okay, so is it fair to assume that they book profits on counting day and then they reinvest on corrections?
No, what I would say is there's a very, very small numbers, but they're net negative. If you look at the counting day of 16 May 2014, there was 349 crores of sale. So point I'm trying to make is domestic guys sell, but those not very significant amounts. But FIIs have been buyers on counting day. That's the more important number and a heavy number. 3,600 crores of buying on 16th May of 2014, 23rd May of 2019. There was 1,439 crores of buying. So FIIs generally go cautious before any uncertainty is the point I'm making. And if they were actually not bullish, they wouldn't add 2,08,000 crores in the previous year. Of course, the domestic institutions in the same period have bought 1 lakh crores. And I think this government continuing was very, very critical on one count because India's momentum of Indian retail investing in India and the conviction was just building up in the last 2-3 years post-COVID. If there was a disruption, I think that would have created a dent in the paradigm shift of how India invests money. India invests money in debt. Foreigners invest in India in equity, which is very ironical. Indians have made not more than 7% weighted average return over the last 10 years with their asset allocation. And foreigners make 15-18% investing in India, and Indians invest only 7.5% is their weighted average return.
All right, but shifting gears now, Mr. Shah, I'll come to you because when we were talking about FIIs, Karthik also alluded, whenever there's a major surprise on the counting day, the markets move aggressively. We saw that in 2009, Nifty, fell about 12.2%. In the following year, it rose by about 17.7%. If there is a major surprise on the negative side, we don't perhaps, the question of this mega majority that everyone is factoring in does not happen for the NDA government. What sort of a market movement do you expect, Mr. Shah?
So market always builds a scenario and prices it in. When actual events are different from what is priced by the market, there is an adjustment. If the surprise is positive, the adjustment is upwards. If surprise is negative, the adjustment is downwards. Now, a lot depends upon, traders' positioning, as Firoz was mentioning. there is some amount of short positioning by foreigners. Now, please remember that foreigners have invested reasonably large sum. Their holding is upwards of $750 billion. And their holding in India is probably higher than most emerging markets. They have probably hedged something here and there. So market reaction will be function of how the actual event is vis-a-vis what they have priced in.
Well, I think we are running out of time, so I'll request, all three of you to weigh in on this and, shed the hat of being financial investors and the doyens in the world of markets and wear the hat of the citizen of India, and perhaps if I can also, be adventurous enough to say that maybe don the hat of a psephologist and tell us, maybe, with a thumbs up and the thumbs down, what, according to you, seems to have worked or not worked for the NDA government. Since we are now out of the 7 phases of polling, I think we can now go ahead and take those questions with you. So, if I can have all three of my guests cut in a window here, it'll be interesting to see how they react to the questions I'm going to ask them. So, as I see it, gentlemen, there are 5 M factors in this particular election, right? And these M factors, to my mind, may have been instrumental in deciding on how the voters actually voted. So there are 5 factors, and I will, these are the 5 factors. The number 1 M is the Modi wave. The number 2 M is the Mandir wave. The number 3 is the Mahila wave. The number 4 is the Muslim vote, and the number 5 is middle class. These 5 M's, if I can have you all in the window here and understand from you one by one with thumbs up and thumbs down. Number 1, the Modi factor. Do you think the Modi factor has played a critical role in deciding the way the voters have voted this time? With a thumbs up and thumbs down. Modi wave, number 1 M. Mr. Baliga, I don't see your thumb. All right. So, okay. So, Modi factor is a thumbs up from all 3 market participants here. The Mandir factor. Has the Mandir factor been instrumental in deciding, swinging votes for or against the NDA government? Thumbs up or thumbs down?
Difficult to say.
2 thumbs down and 1 difficult to say. All right. The women voter, Mahila factor. Is the Mahila factor at play in elections this time around? 2 thumbs up. Feroz Aziz also gives a thumbs up. Okay, so we have the Modi wave, we have the Mahila wave. Muslim vote? Do you think the BJP government has this time alienated the minority communities more than it has in the past? Thumbs down. Muslim vote not. Okay, so neutral by Amrish and Feroz and Nilesh saying that Muslim vote not working in favor of the NDA government. And people like us, people like Suyash and me, gentlemen, the middle class that pays the taxes, have the middle class factored in at all for the NDA government in this election season? Yeah, okay, I want to spend a minute on that. What is in it for the middle class in the elections? Feroz, let me start with you.
See, I think middle class, you can impact middle class by lowering inflation. You can impact middle class by making sure their investments are growing. If you look at the last 10 years, Nifty has done 13.4%, Nifty small cap has done 20%. So how do you impact the middle class? Middle class, you can't give them a 500 rupee swap and for per month and make them richer. You make their investments grow faster. Okay. That's one. Second, bring down their inflation, get housing more affordable. So I think largely inflation and capital markets doing well is what takes care of middle class. Poor people don't have capital to even invest. Middle class has some capital to grow. If you can get their capital to compound at double-digit returns, that's a big thumbs up.
Okay, big thumbs up coming. Well, I think Feroz, you did not shed your, your mutual fund hat while answering that. I'm not sure how much of that middle class which invests in markets has gone out and voted. Well, I think data will tell us. But Mr. Shah, let me come to you. Middle class, you also gave it a thumbs up. What is in it for the middle class with the NDA government coming back, presumably to power?
I think middle class is more optimistic about future. Many have seen their condition improve. Some haven't seen their condition improve as much, but they are optimistic that with Modi Sarkar, their future will continue to improve.
Okay, Mr. Baliga, your view on the middle class before we wrap it up with you.
15 crore demat accounts, and most of those demat accounts would be with the middle class. And the amount of wealth which has been created possibly in the last 2 to 3 years, I don't think the middle class has seen that sort of wealth ever in the past. And that really shows in the sale of automobiles, the real estate, and white goods. So middle class clearly is happy that they are able to enjoy this wealth now, and would have surely, voted for the NDA.
All right, Karthik, I think that's the perfect note to end, this show on. And Firoz Aziz, Nilesh, Amrish Baliga and Karthik, gentlemen, thank you for giving us time here on News 9. Sir, great insights from you all.
Thanks, Yash.
But you out there, just don't leave yet. We have more coming on just after the break.
Helps beat sensitivity fast. Sensodyne Rapid Relief.
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
For the very first time in our investigation, we unmasked the killer of Ravindra Matre.
In 5G, we have to stand with the world, and in 6G, we have to lead the world.
Winning a Grammy was an absolutely surreal experience.
वो पूछते हैं कि हम कौन है गालिब, तुम बतलाओ कि हम बतलाएं क्या.
I told him, you do what you think is best, I will not insist.
This and more. Streaming on News 9 Plus. News is now content. Subscribe and get free vouchers.
जानना है तो देखिए, समझना है तो सुनिए, सीखना है तो पूछिए, और कमाना है तो खरीदिए. जानकारी, सलाह और निवेश सब एक ही सुपर ऐप पर. पैसे का सवाल है तो जवाब है मनी9. आजादी पैसे की. अभी डाउनलोड करें.
Helps beat sensitivity fast. Sensodyne Rapid Relief.
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
Why is the state not looking at putting an embargo on that?
As a Telangana person, I will not accept.
How do ordinary folks deal with this?
Helps beat sensitivity fast. Sensodyne Rapid Relief.
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
How do you fulfill that promise? Because ultimately expectations have to be met. If you look at the political landscape, is it really changing for women? And what is the inability of the forces that dead bodies surface but not the living people?
Helps beat sensitivity fast. Sensodyne Rapid Relief.
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
Why is the state not looking at putting an embargo on that?
As a Telangana person, I will not accept.
How do ordinary folks deal with this?
Welcome back. You're with News 9. I'm Kartik Malhotra. Joining me in the studio now is Shweta Kothari. And what we are looking at right now is the impact on the political economy of India for the next 5 years if the exit poll data is to be believed or if the exit poll data is to be discarded. But let's just start with the exit poll data which came out Saturday evening post 6 p.m. Now, what we understand from the exit poll is that there is obviously a wave of Modi-led NDA government with BJP raking in the numbers coming back to power. In fact, pretty much every exit poll out there has given a thumping majority to the NDA government, nothing short of 350 or so out of the 573 Lok Sabha seats. And if these numbers are to be believed, well, we may well be in for another 5 years of the Narendra Modi government. So it's not just Fir Ek Baar Modi Sarkar, but some exit polls out there also suggesting that we could look at a number of 400 par as well. What does this mean for India? What does it mean for India's political economy and not just the politics? The impact of another 5 years of the NDA government for the citizens and for their purses and wallets. Joining me to discuss that, in addition to Shweta, I've got three fascinating gentlemen here with me this afternoon. Professor Arun Kumar, an economist, Dr. Srinath Sridharan, policy researcher and corporate advisor. Hi Srinath, good to have you back. And we'll also get a perspective on the markets, on the sectors that one should be bullish on with Rohit Srivastava, founder and market strategist, IndiaCharts.com. Gentlemen, thank you so much for taking time out on a Sunday to be here with us. Let's start with brass tacks. Professor Arun Kumar, let me start with you. Exit poll numbers, to be believed or not to be believed?
Well, I don't believe in exit polls because typically, there's so much variation in the exit polls. If the methodology is right, then, they should give similar... So
where is the variation? Exit polls are all converging to a 350 plus number of seats for the NDA government.
Well, this what you're projecting is not all the exit polls. There's also the Dainik Bhaskar, which projects somewhat different. So, exit poll methodology is incorrect for two reasons. Basically, you see, India is very diverse, so you need a very large sample. And second, in India, people don't tell you what they're really feeling. So, for instance, various surveys suggest that you don't get the actual numbers. So, therefore, I don't believe. Let us wait for June 4th to decide what kind of numbers will come.
Okay. Srinath, let me bring this conversation to you. So, we have seen, in fact, there have been cases not too long ago, at least 20 years back, when there was the where there was the Atal Bihari Vajpayee India shining wave in 2004. But that never really, translated into numbers on counting day. How bullish or bearish are you on exit polls data?
I will take it with a pinch of salt. The reality is, if they can...
How much salt? 10% salt, 20% salt, Srinath?
I think I would probably take it with a 10 to 20% salt. But the reality is, all the exit polls, if you look at it, they're indicating a higher number. Even if you count the 10 to 20% salt, they still are going to form the government, and that's a stable news. Markets are looking for stability and continuity, and I don't think the other outcome, which means that they lose very poorly, that the opposition comes in, that doesn't seem to be the case at all.
Okay, so Rohit, that is something that markets have already priced in. Markets are already looking at the BJP-led NDA government coming back to power. But numbers, do you think they could actually, the actual numbers that come out on counting day, which way could they swing the mood on the Lal Street?
So if we actually look at history as a guide, what has ended up happening is markets always anticipate these events, and when the actual event takes place, then after that there's usually calm in the market. Both 2014 and 2019 are witness to this, that there was a rally pre-election in the weeks running up to it, but when we got to the final date, there were huge intraday swings, but finally, net, there was no significant gain or loss on that day or in the next 3 to 4 days. So this is something people have to keep in mind, especially those who are extremely short-term traders and who are looking at the next 2 to 3 days. The market action could be a lot of swings on both directions, but net, not really adding much because, like you said, there was an anticipation since the start of this year that there would be some good numbers. Now, does a number of 340 matter more than a number of 360? That may drive the one-day move. But in the end, just as was being mentioned earlier, stability is what markets should finally price in for what happens in the 1 to 2 month kind of perspective, which is very, very different.
Okay. Well, I think, Shweta, it's also important to move away from the markets and really look at the macro report card of India, right? We saw GDP numbers come in on Friday at a good 8.2%. And inflation also, the chart, if you look at the inflation chart for all of the last 1 year, it has actually been dipping to a point now where inflation looks stable. Do you think all of these numbers would have had any impact in your personal and professional journalistic experience? Do you think these numbers would have had any impact, the macroeconomy numbers, on the way people voted in India?
Absolutely, Karthik. In fact, every time you speak to people right ahead of elections, a couple of things that weigh in on their mind. Number one is, of course, jobs, which is what we have seen the current ruling dispensation being questioned over. The unemployment data in the month of March, which has come down to about 7.8%, hovering between 7 to 8%, essentially stating that India has not done really well when it comes to jobs, both in urban as well as rural sectors. So that continues to be a pain point for a lot of people. Other, of course, is inflation. Now, you mentioned that inflation has been tapering down to about 5.6% in financial year gone by. But when it comes to essentials, your foods and beverages, your pulses, the vegetarian thali, now that has resulted in inflation numbers or dominating headline inflation, even when its own estimate within the CPI basket is relatively low, less than 10%. That has resulted in inflation for about 60% of the numbers that we are seeing today. So those conversations have been persistent, have been on. Now, I heard I heard Professor Arun Kumar talk about the number of factors that will determine whether BJP government will come back to power or not. I think this would be an important question for Professor Arun Kumar. Perhaps he can weigh in on it, sir. So when people are voting this time around, in your assessment, what were those key important political economy issue that they were voting on? While jobs has been one of the target agendas of the opposition, on which it has tried to really narrow down on the ruling dispensation, that there is an understanding that there is growth, but it's jobless growth. Would you agree with that assessment now? Is that what people may have voted on? Because the exit poll data is not reflecting that. Any victory for the BJP to the tune of about 360, and that is what Polls of Polls is saying at the moment, means that people did not really care about whether they were given those jobs or not given those jobs.
So, people don't vote on a single issue. People vote on a variety of political, social, and economic issues. We've seen even, after demonetization, which hurt the unorganized sector very badly, that, the government won in UP, hands down. So, when people vote, they're looking at various other issues also. And what has happened in the recent
issues, Professor Kumar, if you could help us understand, apart from jobs, what do you think, what other issues did people vote on?
So I think what the ruling party has done is use divisive issues, like the Hindu-Muslim issue, the divisive issue. They've used Ayodhya as an issue to get the Hindu votes.
But so Ayodhya, if anything, may have only upped NDA's tally, sir. From what we've been reading and trying to understand, and Ayodhya Ram Temple has only worked positively for the government.
That's what I'm saying, that, they have used these variety of issues. So even though the temple was not complete, but it was inaugurated and Pran Pratishtha was done, it was to affect the voting pattern, Various other divisive issues have been used, like Mangal Sutra and, manifesto being a Muslim League manifesto. Various other such things have been used in the campaign to actually sway the voters. So therefore, the economic issues sometimes get trumped by the social and the political aspects. So if you see, for instance, in 2019, Balakot and so on had a great influence, because before that, when I talked to some of the BJP spokespersons, they were saying we're doing very badly. But come Balakot, the game turned completely, because nationalism became an issue.
So I think let's come back to present day and maybe try and stick for the sake of this this edition, at least let's stick to the economic factors. And it's Sunday. Polling started, in fact ended just yesterday. Exit polls came out just yesterday. We have exactly 2 days to go for counting, just one Monday in between. But from what we understand from government sources is that Prime Minister Modi is already doing 7 meetings today on a Sunday, including one on the next 100 days, the first 100 days agenda for the government. So it seems that the BJP has assumed that the centre is going to see a BJP-led government again in power. So let's stick to the 100-day agenda, the 100-day mandate. Srinath, if I can come to you, with this one, what is the top priority for the government, whichever government, and let's assume right now, at least, for the sake of the data from the exit polls, that it is going to be a BJP-led government, then what is priority number one, which the new government that takes office needs to address in the first 100 days?
Sure. I think, Karthik, the answer already lies in the Prime Minister's address during the campaign in Punjab. He said that they're already ready with 125-day plan, and the first half of his third term will be spent in building youth-based programs, and the other one would be for Viksit Bharat. Okay. I think with that, if you look at it, I think we are going to see a lot of infrastructure development related issues that are going to come up. How do we fast track that? And also they will have to start coming back to what I call the land and labor reforms that's been pending for too long. And of course, I think the union budget will also have to be presented, and I think RBI has rolled out a large red carpet dividend.
That's right.
How are they going to use it? Will they reduce the fiscal deficit, or are they going to use it for pushing capex and hoping that private investments come in? If you notice the last 2-3 years, the government has been spending a lot of capex and the private sector has been slow on it. Will this, if let's say an increased mandate for BJP, will it actually bring private investors back to the table? I think that's a big mandate for the first 100 days.
All right, Rohit, taking a cue from what Srinath has been saying, let's just continue with some of the key sectors that, according to you, would be in focus as part of not just the first 100 days, but well beyond the first 100 days. So Srinath mentioned infrastructure, robust infrastructure development, capex. Albeit capex investments by government, little have we seen thus far on the animal spirits of the corporate sector really get unleashed when it comes to capital investments. But what are the key sectors according to you? Because what we've seen to be in focus thus far has been infrastructure development, and this budget in the month of February that Finance Minister Nirmala Sitharaman presented allocated a good 10% excess, almost 11 lakh crore rupees for infrastructure development. Then we already have an impetus on manufacturing by way of the PLI schemes. We have a separate semiconductor policy which has an allocation of about 76,000 crore rupees. And then we've also got this electric mobility. Are these the key themes and the key sectors that you would be watching out for? Or is there more to the first 100 days and beyond the 100 days for the next government that investors should be cognizant of?
So what I will add to that is interest rate positives. And the reason for that is it is all related. When you want to kick off a capex cycle and infrastructure investment by the private sector, one of the things that the government will have to be focused on, and I'm sure they will be, they're probably just waiting for things to move in that direction, is to bring down interest rates in India. Globally rates have been pushed up, and we have a situation where inflation is getting stable for quite a while. I think if they actually focus on fiscal prudence, which is already been signaled before, and come out with plans that actually stimulate, like you said, the private sector to invest in infrastructure and capital goods sectors rather than the government doing most of the front running, that would solve both problems, that of inflation, which comes through excessive spending. It would bring down the pressure on interest rates by government borrowing, and that would then set the stage for consumption as well, because as rates go down, like I said, interest rate sensitive sectors like autos and real estate all get a trigger along with that. So I think that entire list of sectors will get triggered, and there would be clear-cut measures that would help rates come down.
Okay, so rates, of course, Shweta, I think is a larger issue where India in isolation may not be able to act because, you know, of what all is happening in the world,
all
right?
The global factors
all the global
combined.
factors. But, you know, what they say about elections, right? I don't know if you'll agree with that or not. What they say about elections is that, you know, you never know. It's pretty much like IPL. Don't count your chickens and don't count your victories until the last ballot is cast or until, like IPL, the last ball is bowled.
Absolutely. But, you know, let me take you back to 2019, and which is where it gets interesting, because you gave an analogy in the previous segment. You said, look at 2004, where everybody got it wrong, and the NDA government, which everybody thought will come back, did not really happen.
That's right.
UPA swept over. In 2019, it was the other way around. Every major polling agency, you know, through exit polls had actually underestimated NDA's win, and majorly so.
True.
And if that were to happen, we are currently looking at polls of poll predicting about 362 seats for NDA. That could just be 400.
Absolutely, no doubt. But, you know, my analogy of cricket was actually to come to a point that what if the last ballot, what if the last bowl, in the improbable, low probability event actually votes in a Congress-led government to the center, then if you look at the Congress manifesto, there are certain red flags there.
Absolutely.
And these red flags are purely on the economy end. Number one, there is wealth redistribution, right? We don't know to which section of society, etc. So let's keep that political debate aside. But wealth distribution, eradication of poverty, 1 lakh rupees per person to be allocated, right? Then we are looking at farm loan waivers. Then we are looking at, you know, the minimum export price, etc. to be upped. So overall, and then we are looking at the old pension scheme also to come back in. Overall, certain estimates suggest...
But not all of them are red flag.
Not all of them, many of them are. So what it estimates is that if the Congress manifesto was to be implemented, it is likely to cost the exchequer as much as 10 to 15 trillion rupees. That is 10 to 15 lakh crore rupees, which is between 3 to 4.5% of India's FY25 GDP. Can India afford financially a Congress-led government?
I think that is for Professor Arun Kumar to answer. Apart from that, Professor Kumar, I also want you to talk a little bit on the reforms part of it. If one were to understand and give a report card of the ruling NDA government, give us the hits and misses, and also let's talk a little bit about what Karthik said. Does look like at this point in time, Congress's Nyaya Patra has a lot of red flags which may not be very good for the economy.
You know, what we need to do is we need to disaggregate a little. What we've been talking about till now is about the corporate sector, it's about the organized sector, but the real trouble is in the unorganized sector. And that's why, you know, even though GDP has risen by about 8%, but the share of consumption has been declining. And when the share of consumption declines, then what happens is the demand becomes short, and therefore investment doesn't pick up. So the reason why private investment has not been very buoyant is because, you know, of the problem of demand in the economy. Now, government can raise its capex, you know, through 11.11 lakh crore, but that's only about 10% of the total capital investment in the economy. Now, that 10% can only give maybe a boost to a few sectors, but not across the board. The second issue that I think we need to be worried about is that, you know, if consumption is not doing very well, then can we export more? And, you know, if we are to export more, then we have to worry about the technological factors, why we are not able to compete in the global market and increase our exports.
Right. Okay. I hear you, Professor Kumar. Sure. We are actually running short of time. So, you know, if we can just, there are 2 or 3 other quick issues I want to address. So, you know, I'll request for very short answers. Srinath, number one, yes or no? Can India afford the Congress manifesto if it were to be implemented?
No, theoretically.
Okay, so that's a clear no coming. Rohit, I just want to bring you in also before we close the show. We've spoken about the priority areas for the first 100 days. What are the stress areas for whichever government, whether it is a BJP government or the Congress government that comes to power? What are the stress areas that India must address immediately? I believe Shweta talked about jobs. Jobs is definitely number one on the list. In addition to that, the entire services economy led by the IT sector pretty much in doldrums, no signs of recovery until we see that inflation not sticking and we see the rates actually getting cut. Are these the 2 biggest stress points for any government, or is there more, Rohit?
Yeah, so you can point it all towards, one thing, which is fiscal prudence. and would pretty much hit across the board.
Okay, so fiscal prudence is the word coming in. Professor Kumar, you were saying something. Sorry, I cut you short, but I want to end with you. India also has fairly ambitious target of bringing the current account deficit at about 5.1% of the GDP. It is still very far from the 1.3% expected, for a developed economy. That is the kind of, CAD that one expects. We are still very far from that number. Is 5.1 good enough? If not, what should the government do to ensure that India's export economy picks up and India reduces its dependence on imports?
So I think the key to export is really, the international situation, which is not looking very good.
So that is something we can't control. On things which we can control.
So export is not something which will be able to do very much. So we have to increase consumption in the economy and we have to increase the investment in the economy. FDI and FPI are also not helping us very much at this point of time. And savings of the households are in trouble at the moment.
Right.
So I think what we need to do is we need to give purchasing power at the bottom end of the cycle. If we don't give purchasing power at the lower end, then consumption would not increase. And if that doesn't happen, then capacity utilization would not increase. And if that doesn't happen, then investment of the private sector would not increase. And we'll continue to depend on government.
Srinath, will purchasing power come in any other form other than jobs? So do we circle back to jobs and only jobs being the most critical function of the Indian economy continuing to thrive?
Yeah, I'll broad base it to say that livelihood, Karthik. I mean, we're only worried about jobs. I think we have a long way to go to expand livelihood. I think all the conversations about ease of doing business at the grassroots level, we are not even speaking about SME and MSME. I mean, we saw a law which promised payments for MSME within 45 days, even getting deferred. I mean, I think that's a long conversation that we need to have, saying that how do we actually bring back conversation of livelihood to the grassroots,
right? Not
just the 10% urbanized or educated.
Absolutely. So I think that distinction between jobs and overall livelihood coming in. Gentlemen, thank you so much. Shweta, thanks for being here this afternoon. Professor Kumar, Rohit, Srinath, always a pleasure having you. And we'd love to have you back, in fact, on counting day as well, to see what the next 100 days shape up like. And with that, I think it's a wrap. Thank you so much for joining. News and updates continue right here on News 9 Live. Thanks for watching.
Helps beat sensitivity fast. Sensodyne Rapid Relief.
Kesariya